Negotiations between Russia and Ukraine held on Monday ended with little progress. As hopes for a quick resolution of the conflict are fading away, the commodities market continues its unprecedented rally. As for oil, it started to pull back on Monday after a rapid surge. The reason to limit the growth of oil prices was the announcement made by Germany's Minister Stefan Hebestreit, who said that the EU was not planning to ban energy imports from Russia. Yet this fact had only a short-term effect on the quotes, and today Brent is steadily moving towards the level of $130 per barrel. The uptrend currently prevails in the market, and nothing can reverse it in the near term. On the contrary, there are numerous factors that are fueling the existing rally. Thus, the US insists on banning imports of Russian oil without the support from the EU. Besides, other oil producers are negotiating the possibility of releasing extra crude reserves after ending the partnership with Russia. It's obvious that the process of withdrawal will take time, since Russia accounts for about 10% of global oil supply and 40% of gas supply to Europe. While the US and the EU are working on their new energy policy, Japan has already announced a ban on export of oil refining equipment to Russia. In addition, two largest Australian companies stopped buying Russian crude oil. Based on the actions of large corporations and various political statements, analysts unanimously agree that oil quotes will continue to rise and no limits are seen yet. Some experts suppose that the price may hit $150 a barrel by the end of the month and settle between $185 and $200 per the year end. At some point, oil may even reach the mark of $300 a barrel. As for the technical outlook, Brent oil futures pulled back from the level of $130 a barrel on Monday, but continued their uptrend the next day. Consolidation above this level will pave the way towards the target of $146 a barrel. Given the current news background and high speculative interest, the bullish trend will remain in place. At the same time, we shall not forget that oil is extremely overbought now. This may indicate a sharp bounce from the current levels to the area of $110 per barrel. Anyway, everything will depend on fundamental factors. In the meantime, the ruble continues to tumble, proving that the bottom has not been reached yet. No sooner had markets accepted the record high of 130 rubles per dollar than the Russian currency collapsed to the level of 154 on the intraday chart. The imposed economic sanctions delivered a hard blow to the ruble. The list of companies withdrawing their services from the Russian market is getting longer every day. According to international rating agencies, Russia has become the most sanctioned country, leaving behind Iran, Syria and North Korea. Given that the global pressure on Russia keeps rising and no new interventions are planned by the central bank, the future of the ruble is rather gloomy, especially taking into account the fact that the Moscow exchange is still closed. The technical picture is all the same. In the near term, the dollar-ruble pair is likely to test the new level of 150 or even higher. At this point, the Central Bank of Russia may step in to weaken the US dollar. At the moment, the trajectory of the pair largely depends on the news background. Amid extremely high volatility, there is a risk of rapid jumps and unexpected gaps. Meanwhile, gold has firmly settled above the level of $2,000 per troy ounce. In times of total uncertainty, gold has enhanced its status as a safe haven asset and continues to move higher. However, today its pace of growth has slowed down amid a relatively stable news background. Analysts, as well as representatives of the public sector in Russia, insist on gold being the best hedge against current risks, and investors seem to support this view. In the current circumstances, a serious pullback on gold is highly unlikely in the near term. The quote may well test a new high, just like oil did. We are talking about the highest level of 2020, when gold was trading at $2,073 per ounce. As for the technical picture on Tuesday, gold futures made an attempt to consolidate above the level of $2,000 per ounce. If the price manages to hold above this mark on the daily time frame, it may then head for the level of 2,034. Otherwise, the quote may enter a sideways channel between 1,980 and 2,020. A trend reversal will be possible only when the price settles below the mark of $1,949 per troy ounce. And this is how our analysts see the market situation on Tuesday. Stay up to date, trade wisely, and we will do our best to deliver the most relevant news. Thank you for your time and see you back soon.